Well, my fellow traders, it is a brand new year. I know Riz took care of webinar last week. I really appreciate you guys rolling with me while I was on vacation. And what mess have you left for me since I got back? But first and foremost, of course, I want to introduce the man behind the name. It is Riz. Riz, how you doing this evening?
Doing well. Thank you for having me again. We tried not to make too much of a mess, but maybe we didn't do a good job
Oh
while you were
man,
away.
I gotta tell you, it's been interesting to say the least. I was loosely watching the market while I was on vacation, and now that I'm back, definitely been keeping an eye on it. But yeah, it has been very choppy, to say the least. Kind of going into Christmas, obviously everybody was expecting gifts from Santa Claus, and kind of got them with a new all-time high here on the 4th. But after that, it has been kind of down, and this is usually my marker I use for the all-time high, which I find interesting. It is providing us somewhat of an inflection point there, a bit of resistance for the S&P 500 right around this previous all-time high at 47.43. But since we have a new one, we need to go ahead and put it in 48.1862. All right, let me stick that in there real quick. But yeah, so it's really kind of been up and down as of late. Riz, what's your take on this? I mean, obviously we're in a bit of a downtrend right now. What's your trading strategy in a market like this?
Yeah, so good key levels there already. 4,800 is absolutely one that I would just have as kind of the high area. 4,800 is you kind of have 4,820. That's fine too. The other key levels, as you already have, is 4,600. 4,700 is also a really big one that you can see we've kind of just been struggling with. Take a look at, you'll see depending on how close you can do the candles, you'll see that the market breaks up a bit and then it kind of the next day it might crumble back down and then it tries to reclaw that. And we've been trying to essentially clear that level and stay above it, obviously for the last week and a bit, but that hasn't happened. So as a result, if the index cannot stay above 4,700, that's significantly. Obviously, it's not bullish, it's bearish. So, what I feel is the next area you want to keep an eye on is 4,600, which I had outlined. Um, in fact, a couple of weeks before, probably in our last December webinar, which I think was mid-December, and that 4,600 key level is still important. As we can see by, I think it was like that one candle with a massive long wick there at the bottom. Yeah. So as Chris has highlighted, look at it just bounce up from there. All right. So that 4,600 level is absolutely the next key area we want to keep an eye on. If the market struggles this week, keep in mind at the time of this webinar, it's Saturday evening night. So keep in mind that markets are closed Monday, January 18th, or sorry, January 17th. So it's a short trading week, and what happens Tuesday will be key to get a direction, I hope, for the market. But if, let's just say, in the next week or two, or maybe longer, if we break below that 4,600 key area level that we have there, and then obviously 4,500 is next. But before that, you could see that Chris has the 90-day moving average there, whether it's a 90 or 100, whatever you kind of prefer, and that is just below that 4,600 level, so I keep an eye on that as well. Obviously, we are well clear of that 200-day moving average, which is in the white line. Um, that is a very, very, very crucial support. The 200-day moving average is a very widely recognized support zone. Or crucial area. So keep an eye on that. That's broadly my take on the markets from an index level, from a price level. As far as macro and stuff, obviously we've seen this volatility happen directly in relation to the Fed comments, in relation to inflation numbers, and in relation to employment numbers, right? Jobless claims, new openings of jobs, and so these things obviously will factor in, and we're seeing that volatility play out. I think the biggest cause of the level of volatility that we've seen and indecisiveness that we've seen so far is the rate hikes. And in the last webinar I mentioned last week, that inflation and rate hikes are the two big ones. Bond yields are third, but they're essentially driven by proxy from the rate hikes. So really, rate hikes is the number one catalyst that I would mark um, for 2022, because we know that potentially there could be one coming this quarter, so before March. In fact, Jerome Powell, Federal Reserve Chair, has gotten a little bit more hawkish and said that, look, maybe if we really need to, we might do four. So the market is anticipating three. Obviously, it's struggling with the fact that if there's three rate hikes, usually rate hikes have a cool down effect on the economy, which is why they're doing it, because inflation is running massively hot. It's coming at 7% annualized. And man, I obviously the real world number I think is probably going to be higher. But that's a huge um, annualized inflation metric, and that is concerning. And finally, the Fed is catching up, even though I personally have been saying it for the last 6, 7 months at least, that the Fed is falling behind the curve, and they just recently admitted that they're behind the curve in terms of combating inflation. They always thought, oh, it's transitory, and we touched on that word last time, and they always thought, okay, we'll see how things go. And I think, oh, the inflation isn't here to stay, but hey, they're fucking wrong, and they have been. So it feels good in a way to be vindicated, but it sucks because I was hoping I wasn't right. I was hoping inflation wouldn't be 6, 7%, and stay there, but something needs to be done, and that as a result has a cool down effect on the economy, and as a secondary impact is um, risk assets, which is stocks, especially growth stocks.
Awesome. Thank you for that analysis. Obviously, and kind of touching on the big issues that we're having right now in the market and things that we need to look out for. I want to take a look at the breakdown of the S&P 500 here. Usually we do year to date, but if I do it that way, there's really not much for us to talk about because there haven't been that many trading days so far this year. But as you can see, energy is leading the way. We'll talk about that now in a little bit. Some of the others are a bit underperforming since the start of the year, everything except for financials. So we got the utilities, healthcare, tech, and real estate, and the S&P 500 itself is below the zero line, which we have right here in this darker or lighter gray, actually. But guys, I mean, listen, it's been a couple trading days, really not much to look at. So if we kind of pull it back a little bit here and look at the overall picture over the last year to date, we kind of see a bigger trend here. Obviously, energy making a huge move, and that is kind of driven by the price of oil. We'll take a look at that. Real estate's been coming back down a bit over the last, since about December 31st. Has really been tanking a tad. And S&P 500 really just not doing a whole lot since the beginning of the year, but obviously up since the last year to date. Riz, what are you seeing here? I mean, obviously this energy spike is crazy.
Yes, obviously energy has been a leader, especially in the last since 2022. Oil prices have continued to go up, which we will highlight. And yeah, I mean, we're kind of in uncharted territory. We haven't been in a rising rate environment since the last, 2, 3 years. Um, we were in a rising rate environment in 2018 and leading in 2019, but obviously everything changed in 2020 after this life-altering event for the world. So obviously rates were slashed to near all-time lows. So now that we're getting back into a rising rate environment, we are hopefully getting past the COVID pandemic anxiety, and we're now in the final stretches leading us into an endemic. I hope, fingers crossed. But so we're really kind of on the cusp of a new mountain, so to speak. We don't really know how high it goes. We don't know where it leads to, right? And that's my basic, simplified analogy that we need to be cautious. We have seen a massive rout out of tech, especially growth tech. So not just all tech. There's large caps tech stock, but primarily we've seen it in mid caps. We've seen the Russell 2000 index, which is a small cap index, get absolutely demolished. We've seen a lot of capital essentially sucked out of the market because when we see the selling going on, what's happening? People are either turning it into cash, people are either taking it out of market, people are either reducing risk. So we count that as a negative in terms the opposite of inflow. right? The opposite of risk on environment is risk off. And that's what we're seeing predominantly in high risk, high growth um, companies with massively inflated multiples. That didn't matter. That stuff didn't matter at all up until last year. I would say middle of last year, February, where people really started realizing, holy crap, this is a different year. 2021 is a different year, although it maybe, it was the start of the meme stock year, but it was a different year of 2020 where everything went up and recovered massively. And people, especially the newer traders, unfortunately thought that, okay, why buy something like Procter and Gamble when I can buy something like, you know, uh, not just GameStop or these meme stocks, but any growth stock. Why do I need to buy that when I can buy all these next crazy new solar stocks or these crazy like stocks, Nikola and this and that, and like it doesn't work anymore. At least right now, it's not, and people are paying the price. This is why, although the market is down about 2.5% year to date, people's portfolios year to date have done even worse. Obviously, I'm very happy to say that. I mean, I'm not trying to gloat or show off or rub it in anyone's face, but I can say firmly that my portfolio, my accounts, which I'm very transparent with and share it to public, especially the elite members, it's up year to date. It's near all-time highs, actually above all-time highs. And of course, Alpha portfolio is also doing better than the market, and it's in the green this year to date. So I'm very happy with that. Again, early days, like you said, we're only 2 weeks in, but this bodes well. And I think what we want to keep an eye on this quarter, it's hard to predict what's going to happen in the next year, but if I can go and be as bold to say what we might want to kind of keep an eye on, especially in this quarter, is value type stocks. I'm not saying value stocks are going to make a massive comeback and all growth stocks are going to fall out of favor and they're going to drop and drop. No, I think we've seen a big 50 to 70% decline from the highs in many of these smaller, I would say mid cap and smaller growth stocks. So there are opportunities there, but I am being careful. Being careful. I'm taking it slow. I much rather miss a little bit of the rally than try and catch a falling knife and just continue to bleed on the way down. Right. So that's my kind of, I would say, top-down overview on market sectors, market structure as a whole. But of course, we need to be careful. And I sound like a broken recorder saying we need to be careful, we need to be cautious and blah, blah, blah. But really more than before, and I said it before, 2022 is not going to be the same year as 2020 or 2021 that came before it. The dynamic has changed. 2020 was all about COVID and cases and debts and all that. And eventually the market even moved on from that, right? After summer 2020. 2021 was definitely about meme stocks and retail traders and really seeing how far growth stocks could push their valuations. And we obviously saw that change as the year went down because there's been a lot of pain in growth stocks. And 2022 is going to be the year of seeing how markets can hold through rate hikes. You can quote me on it, and then maybe next year on elite membership in the webinar next year around this time, you can tell me, hey Riz, you got this wrong. Right?
I will be obviously the first one in line to do that if that happens, just so you know. And then all the rest of you here on webinar can do it after me, but I call dibs on first shots. Awesome. Thank you for that analysis. All right, let's get in here to the asset classes. And we alluded to this earlier. Oil has been on an absolute freaking tear ever since it kind of bottomed out here about the beginning of December on the 2nd. It has been nothing but green skies for the most part for oil. Riz, what do you see as this causing this massive rally in the price of oil over the last month and a half?
Yeah, so we've had a very volatile winter so far for the West, for the Western countries. It's been very, very volatile in a sense that we've had extreme cold in the Western provinces in Ontario, in Canada, and even in the U.S. We've seen crazy wild climates. We've seen, fires in Colorado, right? Like we've seen crazy amount of volatility. I don't mean to make light of the situation, but we've seen volatility and craziness and unpredictiveness in even the weather. And I'm not trying to make it into like global warming, this that type of issue, but I'm trying to say that wow, okay, this is something that we have seen markedly increase. We've seen temperatures change. We've seen more natural disasters across the world, and as a result, we've seen that impact supply chains. We've seen many countries cough, the UK and Britain, primarily, even the Eurozone, um, completely fuck up in understanding the importance of the legacy energy industry, which is oil, natural gas. They've completely misjudged. They've completely, literally gotten caught with their pants down, and the tide is washed out. And now they're like, oh shit, because we completely misrepresented how much legacy energy that the countries need, like natural gas, oil, and not everything is just electricity, not everything is solar. We we we've known this. I've known this as someone who's had experience in the energy sector directly for many, many years. But I just find it mind blowing that these companies didn't prepare for inclement weather. They didn't prepare in terms of making sure that they're hedged so that they're not in an energy crunch, which they are now. So Eurozone and UK in a massive energy crunch. They have, it's affordability of just natural gas and gasoline has become very, very difficult for Europe, and then people in Europe will be able to acknowledge that, and from a ground on the boots on the ground kind of level, because they've seen it. They've seen prices go up. They've seen their bills go up. They've seen gas prices go up, and we all have. But it's even worse in Europe. It's even worse, and that's as a result because of the institution is not realizing and putting enough investment into legacy energy, because they're like, well, who cares about oil and fossil fuels anymore? Well, yeah, they do, because there's such a lack of energy, because the requirements are still there, that if you won't maybe see the mainstream media talk about it detail, maybe you saw a headline, maybe you didn't, but did you know the last in 2021, I think in some of the Southeast Asian countries, I can't remember exactly which ones, but I do remember that reading that coal, the black stuff that is so frowned upon for obvious reasons, but coal hit the highest level of production ever last year. Tell me how that makes any sense in a world where we're moving away from, you know, dirty energy and fossil fuels and things that are massively pollutant. And guess what? Coal is one of the worst. So why have we seen such a massive increase in production and use of coal? Because there's no other choice, because many of these countries didn't plan and put enough investments into, regular, I would say middle of the road energy like oil and gasoline and natural gas. Like, these are the things that have massive earth shattering impacts. And we're seeing this as a result of a supply crunch in Europe and Southeast Asian countries and UK and so on. And of course, it's has somewhat to do with demand and colder weather, inclement weather, extreme temperatures, but that's only part of the story. And it sucks because everyone thought, oh, solar and electricity, but these things take time. These things take time. It doesn't happen in a year or two. Like you can have, Greta Thunberg, throwing shade at all these people at Davos and all these billionaires, and she's right in a way, but in one way she's not experienced. Obviously, you can't just go based off of one individual and say, okay, we're not going to invest anything in oil anymore. And then here we go, because you didn't put any infrastructure investments in oil and oil producers and in making sure that this stuff can be transported, this stuff can be taken out of the ground and refined and effectively reach the end consumer. Because you didn't do that, there isn't enough. And as a result, here we are. The average person gets squeezed for the stuff that they were relying on, which is gasoline for their car, because not everyone, it's just not scalable. And when people talk to me about electric cars, and I'm not going to go on a tirade here, but I'll just leave it at this point. When people tell me about electricity and electric cars, it's fine and dandy, it's great, yeah, it's the future, so on and so forth. But if the US only has around, I don't have the exact number, but around, if I think 2 or 3% of the cars on the road are electric in the US. If even 20% of the cars on the road in the US, okay, just the US, were all electric, even 20%, the US would effectively run out of energy, electricity for the entire country. Just 20%. So I love this stupidity in media and it just blows my mind. Like there's so many gaps in the logic, and you would think people would know better, but you can't. These things take time, and I get it. It's all about the future and moving on and environment, and I get that. But let's not kid ourselves and think that this happens in a year or 2 years. And the infrastructure isn't there. The cost effective is not there. The scalability is not there. And I could go on day and night about the gaps in this stuff, in all things to do with energy, not just traditional energy that I have experience with, but in all things, whether it's solar, whether it's renewable, whether it's electricity, so on and so forth. So there's a lot of gaps. Again, I went a little bit further than I wanted to in terms of what's happening with oil, from a macro standpoint. And of course, you see it in the price chart there, leading up to nearly a multi-year high of $85 a barrel, 85 and a half, almost reaching there. So it sucks. It really sucks. It's just, and I know people are going to be like, well, look at all these oil companies. They benefit from this. Actually, no. Actually, they don't, because their costs have gone up. People are leaving jobs that they don't want to do, because if you look at an oil rig, people don't want to be there taking massive risks away from their families. They have to do backbreaking work. They have to be very qualified and have a lot of experience, when someone else is getting paid nearly as much sitting at home and on their computer, doing a job on the computer. So there's a massive exodus in many industries. So guess what? It's not as simple as people think that, these oil companies are making a killing on the gas price, or these gas stations are making a killing. No, everyone's just making maybe the same amount because everything else has gone up. And when everything goes up in price, well, that's what we call inflation.
Thank you for that tirade. I appreciate it. Obviously it mirrors my thoughts as well. As I talked about this before, I don't think they're ever going to have completely clean energy until nuclear fusion is, made to be viable. That's my opinion, because of course all those folks at the climate people don't like nuclear, so we're not going to be playing with that apparently. And yeah, you can't just you can't ditch all your infrastructure and be like, oh, we're going to switch to this new stuff. That's incredibly inefficient and really not where it needs to be at this point. Something else that's inefficient right now as a potential investment device would be gold. Gold really not doing anything here for like the last month. Really kind of just slowly grinding up, but really not much going on with gold. Do you see anything going on, Riz?
No, I mean, honestly, I wouldn't even call that a grind up. It's just, if you look at it since middle of the year, it's just a colossal sideways channel, a narrow channel, like, just range bound. It's been an absolute dead weight, no pun intended, of an asset class. And I mean, there was a time back in the day, I'm old now, back in the day where, there was a place for gold and precious metals as a hedge, as a risk off type of thing. I just don't think that's the case anymore, especially over the last 2 years, with everything changing and people having other choices of asset classes, right? Which I'm sure we're going to lead into now.
Yes, you're absolutely correct, and that being Bitcoin. But man, Bitcoin has taken a bit of a beating here. Ever since last November, we hit this all-time high here. We are currently sitting at, about 37% down on Bitcoin. So yeah, massive move down here, but seeming to be bouncing off around this 40,000 support zone here for Bitcoin. Still pretty volatile to say the least. Riz, what are your thoughts on crypto going into the new year?
Yeah, not surprised. I think people can quote me if they go back to the previous ones. I said, look, if Bitcoin does continue to sell off, I don't think it's going to go to I don't think it's going to like 20 or something anytime soon. And even if it does, the chances are lower. Remember, this is all probabilities at this point. But I did go on record and I said, if it goes below, 40, we could see mid 30s. And at that point, it may be interesting for me to perhaps take a speculative position. But see, that's the kind of trader I am. I'm very mechanical in that sense. I don't have any bias for or against crypto. As far as some people may think that, but I don't have a bias for or against, and I think that's the way to be. I hope people can kind of take that to heart, that that's very important. You can like something and be a fan of it, but never go so far as to you're blinded by it. And then that applies to a product, a service, that applies to a stock, a company, it applies to an asset class, whether it's energy or even crypto. So I think it's very important. I think in this day and age where everyone is so polarized and everyone's like a fanboy for or against something, I think the reality should be that we should be somewhere in the middle. Like what you like, but don't be such a diehard that you come across as being blinded and obnoxious.
No, I think that's really good advice just in general, especially when talking about investing and trading and things like that. Don't make it personal, guys. It doesn't matter whether you believe that Bitcoin is the second coming of Christ and it will lead to salvation for the financial markets. You can believe that all you want, but that belief is not going to affect the price of Bitcoin, sadly. And as you can see here with, negative 37.5% over the last
Yeah.
few months.
Yeah, and I've said many times on record that I think volatility, these massive face ripping rallies plus these soul crushing declines are part of the allure of Bitcoin and crypto as a whole. So, in one way, it's good that it has these massive swings because it keeps the interest there, right? The last thing you want is Bitcoin for the Bitcoin and crypto, um, fans. The last thing you really want is just moving sideways and moving like it's a forex pair. Like you don't want that. You don't want that really because guess what? It doesn't get the headlines. It doesn't get people interested. It doesn't get the massive amount of inflow, and as a result, some outflow as well. Because let's face it, anytime you have crazy face ripping rallies, there will be a lot of speculation involved, and often more than not, there will be margin and leverage involved, which we've seen many of these massive shocks, like you can see in the start of December, Chris. That was many, many, many hundreds of millions of dollars worth of Bitcoin getting sold off due to margin calls. Again, not all of it, but that's kind of how it triggers, right? Because you have a little bit of a trickle down, trickle down. People's stop losses get hit. They're on margin. So, yeah, absolutely brutal. And there's a lot of fuckery in crypto, but that's another story altogether.
You always have to credit Riz for his descriptions. His face-ripping rallies, his soul-crushing, declines, and of course the fuckery going on. We can't forget the fuckery with crypto, of course. But yeah, great descriptions on that one, boss. I got to give you that. Give you props for that.
Thank you. I was hoping you would enjoy that, and of course the fellow elite members and viewers would, and I hope that kind of candidness is appreciated. I don't mean to offend or come across as crass or crude, but I hope that is appreciative. I mean, I've always been unfiltered, so yes, I appreciate that you acknowledging that, Chris.
Of course. The writer has to admit at least acknowledge the fantastic descriptions, to say the least. Yeah. All right. Let's move back here to stocks and things like that. We did take one trade this week, and that is Nike. Getting in on this, complete breakdown here on Nike. Let me see here. Let me pull up the entry on this, and then we'll go to questions. I have received a few questions via Discord, so thank you everybody who sent me your questions there. Please make sure you guys do that. If you can't make the live webinar and you do have a question, please just PM me and let me know, and we'll be more than happy to cover it. All right, so we got in on 13th at 150.80. Kind of dipped down a little bit here on Friday, but yeah, really Nike having a rough time. Riz, what's going on here?
Yeah, I think this is a great entry point. In fact, I took a half position on this, so I have half my normal size position. So I have the capacity to add from a position size and a risk management standpoint. I think if it goes around below 144, I get more interested in it. But really, it's just correcting. It's selling off. I don't think this is unreasonable after the massive run that it's had. since half of last year, since June, I should say. So I'm not surprised. If the lower it goes, like I said, 140 is when I will probably add maybe another quarter to my position. But again, I'm waiting. I'm waiting. The market environment has to be conducive to that. Right now, we've got a lot of uncertainty, hence why we've only taken one new stock position. I will say also we closed ASAN, which we had, and that was a beautiful trade, honestly. I was hoping it would run further, but we still cleared, I think, I don't know, a quick 10% or something like that, depending on elite members entry, but that was mine. I was hoping we'd get a push further, but still profit is fine. So we exited that beginning of the week. So that's a good one. I like to highlight those as well so that people don't think, because anytime we talk about our entries, sometimes they end up being lower and people may be thinking, well, Riz, every time you talk about an entry, it's down from when you entered. But that's not really the case because we close the ones for profit. And it's not realistic to just look at the ones we just opened. So I think, yeah, I think overall I'm happy with our entry on Nike. I'm happy with the exit on Hassan. Maybe we get back in. This is a good one to keep an eye on. And in fact, Chris, before we can get to Q&A, I obviously have a little bit of a positive surprise where I have 4 potential stocks to keep an eye on for not only our elite members who I love, but also those that haven't quite, joined the lead, or maybe they're on the sidelines or whatever reason, and they're watching this recording after the fact. Maybe they want to benefit from this as well. So the first stock, I'll quickly touch on these, not too long, but SQ is one. I've touched on this before, mentioned it before, but it continues to slide. And I always say, you want to watch these things. You want this trade to come to you, right? And clearly it's coming to us. I mean, it's past 52-week lows. So very, very bearish. Does that mean I'm going down and I'm going and shorting it? Absolutely not. But this has gotten crushed. It's one of those growth stocks. Obviously, it was very richly valued, but hey, the last 2 years didn't really matter. But now it does. Now the market really cares about multiples and revenue growth and sustainability and all the other things that fundamentals investors really look at. So in a way, that's good because we're getting a sort of some normalcy back. But what's bad is people that have held, these kinds of growth stocks and continue to hold them, they're kind of bleeding, right? Which is an ideal for them. But for those of us that have the capital, have the risk tolerance, have the ability to, take on risk and manage our risk and kind of know what we're doing with the guidance, which is of course obviously what the elite membership is about. Well, we can take advantage of this pullback. We can let the trade come to us, and when it does find a floor, I will be looking for an entry when this finds a floor, plus when the market environment isn't so negative or so against growth stocks, right? Because we're really seeing this across many, many stocks. Square isn't just one, right? To prove my point, take a look at Netflix. They had some positive news on Friday. This is actually something I mentioned in our watch list earlier. I didn't take a trade, and I'm okay with not taking a trade because really it was just tanking and tanking. But Friday was some respite, some good, positive, bullish news where they increased the pricing for North America that I know of. I know it's Canada. They did for by $2 Canadian, which is like 10 cents US. I'm joking. But
Always got a dog on us, don't you, Riz?
this is coming from a Canadian. So, really, $2 or so Canadian for per month, and then I think $1.50 or something like that US. So that may not be much from a monthly standpoint, but that adds up at the bottom line for revenue for Netflix. So that's why the stock went up, I think, 1% or 2%, and a big, volatile candle in the daily. But this is also setting up for a great entry. I really, really, really like it around the 500. But am I gonna just go in, just blindfolded and it's 500, so I'm an enter now? No, I like to look at it holistically. All things considered, that 500 level is really interesting. Even now, someone's if you're watching this and you're feeling a little bit feisty, you're like, I like Netflix. I think this is oversold. Earnings is coming up. Those should be mindful of that. And you wanna maybe take some exposure after it's really sold off, because it is sold off. That much we can see from a technical standpoint. Well, this is one of those stocks I would be comfortable taking at least a starter position in. I've held off, but who knows? Who knows what this week holds? Um, I have another one. I have two more. So another one is Unilever. This one is obviously a very large cap conglomerate for everything from soap, detergent to household items and all that. So this is not a very sexy or fun growth stock, but this is a very solid value based um, defensive stock. So why am I bringing this up? Because this is looking good from a technical standpoint. Right, nice big bounce up from the 51 area, nice bullish candles, breaks above the 50 and 90-day moving averages. We're also in a market environment, as I've said many times, that value stocks are in favor, defensive stocks are in favor, stocks that make a profit, stocks that have been there for years and years and decades, and have a consistency to their profits and revenues. These are the stocks that are making a big comeback. So this is one you want to consider. No position yet for me. Keep in mind, earnings is coming. When was that? I think it's February, right? Yeah, so beginning of February. We still have a little bit of time for that, 2 weeks. The last but not least, Starbucks. They are, of course, obviously a powerhouse. This has been, again, very massively oversold. And surprisingly, obviously, this isn't a tech stock. This isn't a type of a growth stock, but it's had a tremendous 2021 and 2020, and now it's correcting. So am I chomping at the bit to get in just yet? Absolutely not. I'm keeping an eye on it. We know earnings are coming. I think February as well. No, end of January. So less than 2 weeks. So keep in mind of that. Obviously, they have a dividend coming after earnings as well, and I think that is, Chris, what is that? 49 cents per share. Beauty, right? That can also be something you want to consider. But yeah, the closer this gets to 90, below 100, I think the 100 level could very much hold based on that last candle. But if it goes below 100, I'm very much getting interested, at least for a starter or half a position based on markets. If markets are continuing to sell off, then absolutely not. I'm not going to be entering in a very bearish market. I'm not going to be buying just yet. So something to think about. Hopefully you like these 4 trade ideas. Hopefully you're enjoying these videos, whether you're watching it live, which I really appreciate, by the way, for those of you on here, or whether you're watching it after because you couldn't attend. So again, as my goal is, and I know Chris shares the sentiment with me, that we really want you to benefit. We do things differently. We have no nonsense. We get to the approach, no, fluff, bullcrap nonsense and garbage that's all out there. We avoid all that and get straight to the point.
Absolutely. There's no fluff here. It's just face-ripping rallies and soul-crushing, pullbacks. That's all we do here. Did get a question for everybody here who's live. Now is the time for questions, so go ahead and start typing them in for us. But I got a question from one of our members in Elite. He said, can you take a look at PLTR for a long-term play? All right, well, let's take a look at PLTR. I know we had a position in this a while back, and we kind of let her go, probably for the better. PLTR not looking so hot right now. Riz, what's your take on this for a long-term play?
I don't know, Chris. Did you just hear me do a massive sigh the moment you brought
yeah, I heard it. I think everybody heard it.
That was legitimate. That was me. I sometimes am at a loss for words for this stock because. Okay. Sorry, I read the comment from Claire. You could probably tell I'm just flabbergasted. I mean, I don't have a position in this. This is one of those companies that I feel like, it's always getting new government contracts. I'm not going to go do due diligence on it because I'm hoping people know what this is by now. But it's, getting massive, government contracts and, potential revenue, and government is the largest customer, and they're diversifying their portfolio of customers, and they have new products and updates to their existing suite of products and services. So they're doing everything right. They're growing revenue and blah blah blah. But fuck, look at the fucking stock. They beat earnings too. This is one of those things that I don't. I'm not making light of the situation, but this is like a cancerous stock. It's like a cancerous stock. This stock festers. It's like you enter it, and no matter how good the technicals look, no matter how many defense contracts they get, or how many fucking government contracts they get, it doesn't matter how many billions those are in. This thing just fucking festers, and it just refuses to do anything for any reasonable amount of time. You'll notice it has this it had a push, last year multiple times, and it just fucking fizzles out. It just fizzles out. It's like a very depressing stock. It doesn't have too much range. It doesn't have too much direction or momentum. And sure, it's okay if you have a Walmart or something. That's great. But for a stock like this, which theoretically is a growth stock, they don't make any profit. There should be something that should have some kind of momentum, and it unfortunately just doesn't. And I just sick and tired of this stock for whatever reason. I don't know what the fuck it is. If people lost confidence in management because management sold a metric fuck ton of shares last year, I think 2020, which is absolutely horrible. When you IPO and a year or two in, you're just fucking offloading shares like a mofo, which is just fucking terrible. And I'm just not surprised that they wanted to exit because that's fair. Many of these people have their compensations tied to the stock price, but man, like it's just unfavorable. I really don't have much to say besides that big sigh.
All right, so yeah, that would be a no on that question. Not favored is what I'm getting. Yeah, that sigh pretty much said not favored. Fitty, which is a fantastic name, asked, "How about PayPal?" Yeah, what about PayPal? Let's see. Oh, okay, yeah, it's still in the crapper. Yeah, man? Payment services lately have been getting just thrashed.
By the way, just unrelated, Fiddy, I know you're listening. If I'm ever coming to Singapore, I'm hitting all you Singaporeans up because it's on my bucket list. So just something unrelated. But with that said, PayPal, another clusterfuck of a stock that's just holding, and at least it's doing that. At least unlike, you know, Palantir, it's holding. At least we can say that, look, this is a company that is a growth stock, it's a payment processor, it's not going anywhere, it's in the right industry, it's in the right sector, because obviously we know people are transacting individually. People are not just using the traditional, legacy banks to conduct transactions. They're sending money to each other, whether they're Venmoing or doing the Cash App or whether they're using PayPal. We know that, and so this is a good area to be with a lot of tailwinds. But the fact that it's had a massive correction bodes well if people have a longer term view in mind. I was hoping the momentum would come in by now because I do have a position, and I was hoping that, the market will start looking at it favorably. I'm sure it would have, but it just hasn't happened. Why? Because it's pretty much the market is looking unfavorably at almost all tech and growth stocks, right? And PayPal fits into that category, so it too is being pushed down. But the great thing is that it's holding this level. So as far as what I think about PayPal, I have a position. I feel like this is a good entry for someone who hasn't gotten in yet. I wouldn't go with a full size position just yet in this market climate, but a starter position, maybe if you're really, really liking it, maybe a half position at this level, because it is at a critical support area, from 2020.
And Yas has a follow-up question to that. It says, do you see it going down to 125 if this crucial support isn't held?
Yes, in regards to, I don't know if that's in regards to.
I think it's PayPal. That would be quite a dump. That'd be
I don't think it's going.
That's a bit far.
Yeah, I don't think it's going to 125 yet. Way too far. Way too far. It's Chris. What is that as a percentage? Just take the ruler from current price to 125. No, 125 would be way too low. I get where you're coming from for that support area because that's the previous gap fill. It would be another 30% drop. I don't think so. I think you know what? Let's see if 170 area can hold. Yeah, I think 170 is one that needs to hold. I think 125 is too far right now to make a call on. But you are on the right track, Jazz, with that. Um, but yes, 170 is a key area that I want to keep on. Even 178 right now is a very crucial. It's at a very crucial level right now.
Awesome. Thank you for that. And I know a lot of our members are holding that one. Nikhil says, how about CRWD? Well, let's take a look at that.
Yes.
Another one getting beaten down.
Yes. Another beatdown tech stocks. I mean, there's literally thousands of these. But this is in a very unique and I think a forward-looking industry of essentially data security, online security, all that kind of stuff, enterprise security. So this is a very interesting one. I like the company. Again, this is a growth stock, high multiples, so on and so forth. They've had good earnings that they've beat, but again, very much at critical key support levels. It's had a haircut of what, Chris, 290 from the high to now. So see, this is the kind of thing that you're going to be seeing. So I think if you have the patience, you have the capital. I've been saying, have cash, have capital, and you like the stock and you like the company and you feel bullish on the sector, nothing wrong with perhaps nibbling, okay, a little bit, okay, nibbling, all right? But this is at another key support area of around 175. So Chris, if you zoom out a bit, where is this next? Because this had a massive tear in 2020, right? Yeah. So, keep an eye on this area. Again, very much going to depend on how the broader market moves. But 160, 150 would be another key level. Okay, 155, as Chris outlined there, is a very crucial one. I hope that kind of helps. I don't have a position right now in crowd, but again, it is something that I watch, that I am keeping an eye on.
All right, guys, if you're ready for a face-ripping rally, buckle your safety belts, because this is a question that I know is going to trigger Riz.
I mean, I don't want to make Michael feel.
So Michael said, "Hey, Riz, you mentioned EVs like Nikola earlier. Could you please give me your thoughts on Rivian?"
Okay, let me just collect myself here. So, I mean, Rivian, again, they have a product. Unlike Nikola, they have a product. Unlike Nikola, they didn't need to push it down a hill to make it move. Unlike Nikola, the founder and the management aren't complete crooks and frauds. So that's the distinction between the two electric EV makers. Now, continuing on in regards to Rivian, completely overvalued, was very much hyped. You can see that in the price post IPO, and you can see it go lower. I think it's still overvalued. I kick myself quite often anytime someone reminds me of it, and I appreciate you remind me of it, Michael. I kick myself, I mean, like, metaphorically, because I was very bearish on it, and I was going to buy puts on it. I wasn't going to outright short it because of the inherent risk, but I was going to buy puts on it. But I'm like, no, fuck, the implied volatility is so high, premiums are so high. I don't know, these fucking morons out there are just going to pick it up at Wall Street Bets, and they're just going to fucking pump this shit. So fuck it. And here we are. And you know what price I thought I was going to buy puts at? It was around 160. I was going to buy puts when it was around 160 at like 155 strike. So yeah, even one contract. Again, this is hindsight, right? And I don't really care. Honestly, I'm just joking. It doesn't bother me one bit because there's millions of opportunities that I've missed, and it's part of trading. And I'm sure there's millions of opportunities that I've saved myself simply by not taking, because you know what? We all know anytime you take a trade, there's risk involved. So I kind of feel like shit, but in a way, I feel like, you know what? Yeah, at least it went where I thought, which is, significantly lower. It's almost pretty much halved where it was. So apart from making a decent chunk of money on that potential trade, remember, potential, who cares? It's all hindsight, 2020. I feel like this isn't one that I would want to enter. I'm not really bullish on this company for now. Does it have a place in the EV automakers? Is it a company that has a product, has a potential good growth, pipeline? Yes. But for 150 something vehicles it sold, market cap, I don't even know. Chris, like if you pull up on that top right hand side, yep. What's the market cap right now is 71 billion, right? At the high, it was probably what, like 180 billion or something. Let's just assume it was 100 billion. Let's just say 100 billion for about 156 vehicles, I think, sold so far. How the fuck can someone justify you know, 0.8, 0.75, so 750 million valuation, uh, give or take, per vehicle sold? Christ, Chris, I got to IPO Riz International because Jesus Christ, dude, this we could be looking at a future trillion-dollar company because Jesus Christ, man, these these people make nothing. These people make nothing in profit. God, I'm shooting myself in the foot by not IPOing. But either way, all jokes aside, fuck that. I don't want to IPO because don't want anyone else to control anything besides what's mine. And I'm kind of again very off topic. But either way, I like to run my own ship, Chris, as you know,
Indeed.
with some crucial sailors by my side, of course. But with that said, Rivian, no, thank you. For me, just yet, at least.
There you go. That is Riz's take. 750 million per car. Those are some sweet ass cars. I got to put it that way. So yeah, we are not positive on Rivian right now. If you got that, we do not believe it is the second coming of Tesla. All right, second question from Fiddy says, NVIDIA bounced off the 100 moving average. Is this a good time for entry or should you wait? Yeah, nice technical bounce, but yeah, still in a pretty solid downtrend. My opinion's wait, but Riz, what is your thoughts?
Yeah, wonderful company. Wonderful company. An opposite side of Rivian, a company that I have traded, that I've bought, but obviously one that I hope I hadn't sold. Again, hindsight. I'm not trying to say that this is how you should be thinking. I'm just kind of provide some color. That yeah, I've loved this company for a long time, but I've traded it in this kind of company. It would have obviously paid off to just be an investor, buy and hold and forget about it. But hey, that's hindsight. And I do that so that people can realize that, hey, look, you're not the only one. The reason I mentioned is you're not the only one that goes through these things. Even me, after millions of dollars in profits over the years, in God knows how many hundreds of millions of dollars I've traded in volume. God knows, maybe even a billion mark. I actually should go back and track that for a good fun statistic. But after tens of thousands of trades, I can still tell you that even I sometimes feel like, you know what, I wish would have just helped. And that happens to the best of us, right? So again, just providing some color on kind of psychology, trading psychology and mindset. So to answer Fiddy's actual question, very much so right at this EMA moving average here, support area. I think it can go lower if the market continues to kind of trend lower. I feel like this thing has had a massive, massive rally. Even as great as a company it is, I feel it's a little bit frothy. It's a little bit frothy valuation wise. And for those of you that know, I like to have, when I enter in terms of sort of a more longer term play. If it's a purely technical play, that's a different story. But if I enter something that is pulling back, or something that I'm okay for holding for a few weeks to few months, I like to have a little bit more safe margin of safety baked in. And I think not there yet personally for Nvidia. And I know people can disagree, and that would be fair because it's a fantastic company. I can't really fault anyone for buying this for long term. But as a trader, as a swing trader, and trying to get our ideal entry, maybe not yet. Okay, just my 2 cents on that one.
Awesome, and this is a very interesting question, and I think this is going to give some insight to some people who are curious about this. When did it happen? When the fundamentals for a company actually contribute to the stock price? So, it's a good underlying question. Is like, is it all just based on technicals now, or do fundamentals still play a role in valuation?
Yeah, yeah. I know Tom made that kind of remark. In regards to um, my response on Rivian. But yeah, he said in tongue in cheek, but yes, he's right. You know what? it feels almost like fundamentals have been worthless. And you'd be right in feeling that. He would be right in feeling that, and because I felt that myself. Like, yeah, but you know what? The markets have been around longer than we have. They've been around for centuries. We know that eventually it does matter. Eventually, a 2 3 year time span in the grand scheme of things is nothing, right? So we do know, we can be sour on it. We can be annoyed. We can be, um, a bit downtrodden on it. But at least I can say in the long run, fundamentals absolutely do matter. So yes, and I think if we have solid technicals with a mix of solid fundamentals, even if you're losing on the trade, even if you're losing on it as an investment, it is completely fine. It is completely okay to have a position that's in the red, but you believe in it. Apart from believing in it, you also have the technical setup is there. The fundamentals are there, even better, right? So I think it's very important. And I think the market is now realizing that too, and so are many investors who have decided to buy, potentially Rivian at 150 because this was going to go to the moon. Well, tough fucking luck. If everyone is that fucking smart, we would all be making money hand over fist, right?
I have a different way to answer this question, so let me tell you guys a little story. I'm going to tell you the story of Helios and Matheson and MoviePass. So Helios and Matheson bought this company called MoviePass, and everybody freaking lost their shit, right? Everybody was like, oh my gosh, we've got to buy this thing. It's so fantastic. It's the greatest thing since freaking sliced bread. And we're all sitting here in Elite. Now, I remember when this was going on, and you can see how far I have to scroll back here on this price, by the way. And just so you know, it actually was never $5,000 per share. This is because of reverse splits. But yeah, everybody was just losing their socks, and it was up here. I remember when we were watching this, when this went nuts, and well, now it's valued at less than a penny, where before I think it was. If I remember right, I think it was like in the 150s or the 200s, or maybe even 3, if memory serves. And then the reverse splits happened, and it just no, it was not a Y2K play. It was MoviePass was what it was that got into it. It was here, actually. It was this spike right in here where everybody was going freaking nuts over this stock. It was the hottest thing you'd ever heard of. It's like, why did you not get in on this? I remember if I remember correctly, I think Riz actually shorted this and made money off of it. I don't know how the heck he found shares, but somehow he did. Everybody was jumping in on this. And we're looking at it like, no, fundamentally, this is crap. Why would you ever buy this? It makes no sense fundamentally. And, well, we were right. So it's one of those things where, yeah, it may not happen right now. And it may be like, why is Rivian, valued so highly when, their fundamentals are garbage? Okay, well, hype can carry it for a little bit, but not forever. Otherwise, Helios and Matheson would actually be $3,000 a share. All right, that's my way of explaining it.
Fantastic. That really brought me down to memory lane. Yeah, I mean that brings back a lot of memories, Chris.
Yeah.
Yes, you're right. I actually shorted it. I felt when it literally went under. I was like, told you so. But the problem with that is it took so long that I'd already moved on, made money. So this is a lesson that the market, and you can be right. You can be right in your thesis, but the market is so tricky because not only do you have to be right in direction, but you also have to be right with timing. And we know that when you mix those two things together, it is so hard. But when you do get it right, that what makes it so rewarding. You'll never get it completely right, but when you do get it right, it's very rewarding. But with that said, yes, a tremendous trip down memory lane. I think we have a couple more questions. One from Michael Rossi. Mike, good to have you on.
Mike says, hey, what are our thoughts on coin? It appears to be at long-term support. I don't know how long-term it can be. We don't even have a 200 moving average yet. But it does seem to be what I would refer to as support here. What are your thoughts on this one?
Yeah, we've known, obviously everyone knows about this company, Coinbase, crypto, exchange. But as far as a company, we've also seen that it also tracks and moves a bit alongside the movement of Bitcoin. So this is a company that if it's around stock that you can, as a sympathy play, if it's around the 215 area, if it gets there, and we see Bitcoin maybe bottom out, and maybe we see the trend of Bitcoin change, this could be a runner, right? This could be a runner. What a, you know, it's a way to consider this kind of trade as far as a company as an isolation or a trade. Um, I have short puts on this because I think, yeah, this is very much kind of getting into oversold territory. But we've seen with these kind of companies how low is low enough, and we don't know that because this is obviously a 2021 IPO. This is still a recent IPO. It hasn't been a year just yet, but it's going to be, and it hasn't had the most fascinating or momentum driven positive price action. As you can see, it's had these peaks, valleys, and then just sell-offs, right? So I think there's better opportunities, Mike, honestly, than Coinbase, especially in an environment that has given us so many opportunities, especially in growth and tech. If you really want exposure to crypto and you want exposure to a US-based crypto exchange, then sure. But otherwise, better opportunities elsewhere.
Especially at this price point. I feel like it's pretty high, if you ask me, for a play like this. Okay, Rosine says, your thoughts, please, on my latest tech darling, which is CFLT. I have not heard this one before. Confluent Incorporated. Okay, another recent IPO. Looks like it's got smacked down a bit.
Yeah. Keep this on your watch list, and keep me posted on this too. Because this is an interesting one. I like hearing about new technical plays, and Resin has had some good ideas, so to speak, on finding or being aware of certain tech stocks, growth stocks that are not in my wheelhouse, but at some point might be worthwhile having in my wheelhouse, right? So this could be one of them. I haven't looked on it, honestly, bro. I haven't looked at it before. I haven't seen it before. This is the first time, just like Chris, being brought to my attention. As from you say the fundamentals are not the greatest because it's a growth stock and it's unprofitable, high multiples. Sure, great, that makes sense. And it's also a recent IPO from June, July. So I would like to keep an eye on this. I don't think there's enough precedent or enough history to say that this can't go below 60 or it can't reach post IPO price, because it's tough to say. There just isn't enough price data, enough history. So I think this is more of a conviction type play. If you know the business, you know the company, you understand that it could be trading at multiples, in term from a valuation standpoint, and if you believe in the thesis of what it does and that it can continue to maintain its growth trajectory, then absolutely. I think it doesn't really matter if it's at a 60 support or if the stock is hitting up against resistance in these kinds of ways, especially if it's a recent IPO, which this is.
Awesome. Well, guys, we have been at this for over an hour. I want to just close. Riz, what are your thoughts going into this week? Obviously, as you mentioned at the beginning, short trading week. We got MLK Day here in the United States, so the U.S. markets will be closed. So we'll start the markets again on Tuesday. What are your thoughts going into this trading week?
Yeah. So here we already have the key levels as you underlined. I'm waiting to see if we can get to 4650 and then 4600. I can't call it. I just can't call it. It's just so tricky the last week. And we have many forces at play. There always is many forces at play, but we have, like I've said before, a bit of a very cumbersome market environment where we're finally in a rising rate environment off of these massive 2 years with tremendous recoveries, right? And 2 years where the world has very much shifted. So it's going to be interesting to see. So I'm taking it day by day, but I think this week I'm hoping we can hold that 4,600 level. The more the market can carry and hold this 4,600 area and stay above it, I should say, the better. If it does puke, and this won't be pretty, but if it goes below 46, maybe we could see the 4,500 region. sooner or later. And at that point, I would be very confident in upping the risk a bit. Doesn't mean you just put all your chips in. Doesn't mean you go all in. But I would be more confident in, taking on more risk at that point. And if maybe the market drops a little bit more, again, I'm not saying it will, but just projecting here. What if the market goes to the October low of 4,300? Chris, what is that as a percentage from Friday's close to now to 4,300 as a percentage drop? The market would need to drop another 7.75%, nearly 8% to get to 4,300 October lows, right? That's a great, fantastic point. If we get there, I don't know if we'll get there, to be honest, anytime soon, but that would be a great entry to really turn on the taps to risk. But on the flip side, if we go from all-time highs, which is around 4,800, and we go from 4,800 to 4,300, Chris, what is that as a drop? Yeah, 10%. That's correction territory. See how that works out, right? You can't go wrong adding on to your positions or taking on market positions at 5% increments. So 10% is where I would up the taps. In 2020, when the market dropped 15%, 20%, I was like, I went, heavy. I went heavy. And then when it dropped another 5-10% from there, because the market had about a 30% haircut from the highs in 2020 in a span of 2-3 weeks. One of the fastest sell-offs in history, and of course, one of the fastest sell-offs I've ever witnessed in my life, including 2008. So you can't go wrong. You can't go wrong, turning on the taps at these kinds of valuations, so long as you're buying good companies. If you're buying shit like fucking AMC, and whoever told me, I remember, gave me so much fucking grief. I don't feel bad for this person. This person had and I'm gonna tell you a funny story. Maybe this person is smug enough to be watching this. I don't know, but they're probably watching. They're not an elite, but either way, they were an elite, and they were effectively. They had a call with me, and they're like, "Riz, I want to buy AMC." I said, "Look, you want to buy AMC? Go ahead, but just know that if you make money, great, fantastic, take the money." And I think they put in like a few $1,000s, and it turned to like 10 or 15 grand. And they were like, "Riz, this can go to $3,000 a share." I was like, "Dude, at $3,000 a share, that would be a bigger valuation than Apple." He's like, "It can happen. The institutions are fucking us, and the SEC's in on it, and the government's in on it." I'm like, "Bro, even if that can happen, the chances, I think, like 0.0001%. It's a black swan. I don't deal in black swans either side. You can have a little position, sure, but to have a few $1,000s that you YOLO'd and now are looking at 10, 15 grand and are saying that it can be life-changing money later on, even though this 15 grand is very much important for you and your day-to-day life, just take some money off. Keep a couple grand. Take the wins out. No, Riz, you don't know what you're doing. Fuck you, Riz, and all this kind of stuff. Well, Chris, bring up AMC. So I hope you're watching this, whoever this is. I hope you fucking realize there's a reason why I'm here, and I've been doing this for nearly 15 years now. And I know all the AMC MOAS fucking people will what is MOAS? Literally sounds as stupid as it is. Mother of all short squeeze. That's what MOAS is. I'm all for sticking it to the man and sticking it to the fucking hedge funds and institutions. I'm all for that. But if you're gonna shoot yourself in the nuts and then cry that the institutions, got you in the rear, that doesn't sound right to me. So whoever is held that AMC past the $50 mark when I told you to sell, I hope you're happy with your life-changing money, which is less than half than what it was when you spoke to me.
Yeah, guys, keep it in the scope of reality. That's Tom. You're absolutely right. That's a mic drop right there. So, guys, thank you for coming out. Really appreciate it. If you made it this far in the video and the replay, guys, and you're watching us on YouTube, leave a comment down below. Put RIVN sucks. Really would appreciate that, and of course, click that like button and subscribe. We'll really appreciate it. For all of our Elite members, thank you for being here live. I really appreciate it. Thank you for all the wonderful questions. And Riz, thanks for coming on and sharing your insights and your hilarious comments and descriptions. Really appreciate it.
Pleasure. Thanks, everyone, except that person who bought AMC.
There we go. All right, we'll see you on the next one, guys. Thanks, everybody.